I'm sick as a dog, but that's not going to stop me from teaching you guys how to actually read your charts and what exactly market structure is. Now, if you're a complete beginner and you open one of your TradingView charts, I'm sure that you're probably thinking, this looks like a lie detector test of somebody that's gotten caught. And it's very easy to fall into the mindset that it's gambling because these candles look like they're just bouncing everywhere for no apparent reason. But once you understand how market structure works, you're going to see that price likes to move in patterns. There is a story that becomes quite clear and logical on where price wants to move. And this story is about who is in control, buyers or sellers. Knowing this will tell you where price is going to go next. So what's going on, guys? It's your girl, Megan Savage. And we are continuing our Quick Start Trading mini-series, Volume 2. So if you're new to the trading scene and you have no idea where to start, I know it can be super overwhelming, especially when there's all these different people saying all these different things with all these different strategies. I'm here to make it very, very simple. So if you're a complete beginner, make sure to go check out Volume 1 that I did last year. It's going to be in the link in the description. It's going to go over all the basics and the foundation you need to know in order to start trading. And in this Volume 2 series, we're going to go more in depth. So don't worry, you wanted someone to hold your hand, and that's what I'm here to do. Because what I'm here to do is make sure you don't get so overwhelmed that you just stop trading in general. So let's dive right in. For today's lesson, we're going to be using TradeZella, which if you do not know what this is the top backtesting and journaling platform that you can use as a trader. I love it. I've used it for years. I get all my students to use it. It allows them to not only get their reps in from years and years and years of data, but also to have all of the data that they need in order to improve and scale their strategy. I won't get too much into that today, but definitely I urge you to go take a look at it if you are wanting to take this seriously as a trader. And also I love using this for my students because there is an application that allows me to connect to their trading charts and be able to see all the data that I need in order to help structure a plan for them. And don't you worry, I will leave the info in the description for you to go take a look yourself. So what I've noticed over the years is the main reason why beginners don't know how to actually read charts is because they don't know what they're looking for. Imagine running a race and not knowing where the finish line is. They learn candles, that's awesome. They learn time frames. That's also great. But no one really told them that this chart is not just a random collection of candles. It's a recorded battle between buyers and sellers. The pattern is readable and repeatable. And when you start knowing what the pattern looks like, that is when the charts stop becoming noise and you can actually start making money. Market structure is so important because literally your entries, your exits, your targets, they all rely on this foundation, on this concept. If you skip this step, everything will be very confusing. Here is the simplest possible version that I can give you guys. Price does not move in a straight line. It moves in waves. So you can see up, down, pull back, so on and so forth. And it also moves in the opposite direction, going down, bouncing, going down, bouncing, going down, and continues. These waves create specific patterns of highs and lows. And reading these patterns tells you three specific things. If price is going down, price is going up, or price is going sideways, also known as the kangaroo market. And that is it. That is market structure to its core. I'm going to break this down a little bit more for you guys. So the first state that the market could be in is called an uptrend, also known as a bullish trend. The market is moving with higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Each wave reaches a higher peak than the last. Each pullback is higher than the last one as well. Buyers are consistently in control, and the path of least resistance is obviously up. Then there's the second state, which is a downtrend, also known as a bearish market. And as you can see here, the trend is very opposite to the last one, which instead of higher highs and higher lows, we're doing lower highs and lower lows. The sellers are in control here, and the path to least resistance is down. But now I'm going to tell you about the third state of the market, and I'm going to talk about this little patch right here. When the market is not giving an obvious up or down trend and it's going sideways, you can call this the range or the kangaroo market or consolidation. It's making no clear progress in either direction until there was a break of structure right here, and then it continued to go in a bearish trend. Neither the buyers or the sellers have any power in this undecided market. Now, before you even think about placing a trade, your job as a trader is to be able to open these charts and decide your bias, your narrative. Is the market going up, down, or is it in consolidation? Everything, your strategy, your entries, your exit, your targets, everything comes after knowing where the market actually is going. And the simplest reason I can give you guys on why this is so important is, would you rather catch this sell right here? Or would you rather trade with the trend and catch all of this move up here? Now, I'm not saying that you're for sure going to get that. And I'm not saying you can't get a couple good shorts in when you are trading in an uptrend. But if you're a beginner, why are you swimming against the current? Your win rate will be much higher if you know how to read market structure. It's not about winning all the time. It's about protecting your capital. So if the chances you're going to win is higher if you're trading with the trend, why wouldn't you do that? Now, if you watch some other people's video on YouTube, or if you've seen my videos before, you know I talk about higher highs, higher lows, swing highs, swing lows, and whatnot. I'm going to teach you guys, for those of you who don't know what a swing high and a swing low is. And the easiest way I can get you guys to remember is put your 3 fingers together. Your middle finger is longer than the 2 fingers on each side. This is a swing high. Now, if you want to know what a swing low is, flip it upside down. It's the exact same thing, but opposite. Now, let me give you an example on the charts. It is a 3 candle formation. I'm going to give you guys a few seconds to take a look after learning what we just did with our fingers and tell me if you can see a swing high. And I know that there's multiple, but take a look. Yeah, just kidding. I know you guys aren't going to do it anyways. This purple candle right here has the highest point, and the 2 candles beside it are lower. This is a swing high. An example of a swing low is actually right beside it. This is the swing low. Both candles on either side are lower than the middle one. Now, knowing that, you can probably see that there are a lot of swing highs and a lot of swing lows all throughout the chart. And I know, because I was so overwhelmed when I learned this concept about, well, which one is more important than the other? Let me blow your mind. It's literally this simple. Now, I zoomed out a little bit to give you guys more of a better picture. I want you guys to take a look at this chart and see the more prominent elbows in the market. There are probably a billion swing lows and swing highs in this little section right here. I'm not even going to zoom in because I just know that's the case. However, when you zoom out and get a bigger picture, they're not that important. Now, I just marked out a few of the more prominent swing highs and swing lows. And obviously, looking at this, you can tell that we are in a bullish trend. We're in an uptrend. You can see the movement going up. The more simplistic your trading journey is, the better. And you do not want to sit here all day going over every single little move in the market, because you will not only go insane, but it will be too much information and you will get analysis paralysis and not actually know what way the market is. You'll be constantly second guessing yourself, and it's just going to be a huge mess. The best exercise I can give you is to just go on your chart, go mark out the prominent highs and lows in the market, and ask yourself, is it going up, down, or sideways? As you get more experienced, you will start to know what's important and what's not. Now, I'm going to go back to this example right here because I'm going to teach you guys about what is a continuation cycle. Remember how I mentioned before that this is a breakup structure, also known as a BOS? This is a continuation signal. So price didn't really know where it wanted to go. There was no clear sign about if it was going up or down. Then we created this big swing low right here. And price over here closed below that level. We broke the structure. This is a huge sign that we are going to continue in that direction. Now let's take a look what price did. We indeed started to plummet down, and you'll notice these all over your chart as well. The sellers took back control in this example. When you're in a trade already and you start to see even more breaks of structure, this is a signal that maybe the story is not over. The students in my community love learning concepts like this because trades that they used to be so stuck on and not understand, they start to see these patterns in the market and they're like, oh my gosh, now that I notice it, I know when to continue or when to back out. But now I'm going to teach you guys about a change of character, or also known as a market structure shift, or MSS. So it's very similar to a breakup structure. So we'll go back to our other example here. Price didn't know what it wanted to do, and then it broke out and continued to go down in that direction. A market structure shift is when price for the first time breaks in the opposite direction. So this current trend is what? It's a bullish trend. Now I'm going to zoom in a little bit here. But as you can see, we have a change of character here, or an MSS, where instead of continuing on our bullish trend, we now broke below that, and it's going to be a bearish trend, which you can see through all of this. Any of these concepts that I go over in my videos, if you guys want a more in-depth video about it, feel free to ask in the comments. But I want to talk about one important nuance. A market structure shift does not immediately mean reversal in your position at all. It means you need to stop looking for continuation trades and start maybe watching for evidence that a new trend is forming. I don't care which guru you're listening to, what mentor, what community you're in. If anyone tells you to just enter and exit off of stuff like this, like one confluence, one confirmation, they're wrong. I use and teach multiple concepts that go together in order to give you more confirmation, more evidence on which way the market is going. They work together, and the more you have, the better. One market structure shift is a warning. Now keep in mind, we're on the hour time frame. So if we were to go into lower time frames, we would see a lot more, but I'm doing this just to keep it simple for you guys. But here's another example. We have our change of character right up there. Then we have another break of structure right here. And we did end up going down, but I don't know if anybody notices. We're sort of moving sideways within this range. Another confirmation of this is we do have relatively equal lows right down here. And then what happened? We ended up starting to climb. What happened? Not only did it create relatively equal highs, but we ended up over at this candle having a character change. And whether you wanted to catch this move or this move, I bet you if I were to go on lower time frames, I definitely would be able to find some type of setup. Now, for those of you who don't know what I'm talking about, I'm actually talking about top-down analysis, and it's a key factor in all of what I'm talking about right now. For example, look at these two clusters of candles on the 1 hour. But if I were to go to the 5 minute, look at how many more candles and how much more movement is in there. This one too. Now, your top-down analysis will look different depending on what type of trader you are. If you're a swing trader, if you're a scalper, like whatever time frame you trade on. I'm in and out within the session, sometimes an hour, sometimes even 20 minutes. At the beginning of the week, I will always take a look at my weekly chart just to see if there's any big imbalances that I missed. I know for some of you might not know what that means right now, but pretty much think about magnets in the markets. So any identification that we're overall going bullish or bearish. But something that I want you guys to think about is this one candle is a whole week's worth of movement. And I promise you, there was probably a lot of buys and sells in this entire week. But like I said before, why are we trading against the trend? So I'm going to take a look here. I'm going to see if there's any imbalances, any gaps, and do my markup here. Then I'm going to go down to the daily. And hey, look at that. That one candle turned into all these other candles. And notice how we have some bullish candles. That day, it might be better to look for buys. But again, I will go and I will look to see if there's any more imbalances that I need to mark up, if any of them have already been tapped into. Just anything that will tell a story. Then I personally usually go down to the 4 hour, see all those candles there. I'll go to the 1 hour, and I will get my overall picture. Now, if my high time frame is telling me it's a bearish trend and I don't see any reason on these time frames that we're going to be going up, then I'll just be doing what I told you guys to do, which is trading with the trend. For my example, it's an overall bearish trend. So that means high time frame is bearish. However, we could have a bullish day. Now, what does that mean? This is some advanced stuff for the newbies. The reason why I wouldn't just want to blindly enter based on high time frame analysis is, let's say I entered the market right here. And obviously I'm trading with the trend. So I'm looking for a short. And let's say this was my TP, but my stop loss was here or somewhere around that. I would have gotten stopped out and then the trade would have continued without me. And nobody likes to do that. This is why I look at what's going on with the daily, the weekly, the 4 hour, the 1 hour. But I don't actually take entries on there. I then go down to the 5 minute, 15 minute, depending on what's going on. That's for a whole other video. But I'll have a bias and narrative in mind. So if I notice on the 1 hour, there's a huge imbalance. So a magnet in the market that is like right here. Even though I'm overall bearish on the high time frame, there might be some indication that I'm going to have a bullish day. How you deal with your risk is very, very important. Maybe you de-risk whatever's in your rules, but maybe I will take a de-risk long on the 15 or 5 minute if it's giving me a position to do so. Or I might wait for that balance to be hit and then watch and see for evidence and clues. Now that I see it's going to go down again, maybe that is where I will take my short. I know it's a lot of information, but I promise you the more you practice, the more you will start to see these stories in the market. Let me give you a simple framework that you can actually use today. Before you touch any chart, you're going to ask yourself these 4 questions. Question 1, what is the daily chart doing? Is it going up, going down, or going sideways? Question 2, is the 4 hour and 1 hour aligned with the daily? Or could it be maybe a short-term counter move? Question number 3, what is the 15 minute doing? Keep in mind, that is where you're looking for entries. Is it giving a setup in the direction of your high time frame bias? And question number 4, if I take this trade, is the market structure supporting it? If all the answers to that question are yes, you might have a high probability trade on your hands. Of course, it doesn't make it guaranteed. Nothing is guaranteed with trading, but your job is to try to make it as probable as possible. And if the answer is no, do not hesitate to take a step back and wait for more evidence. You can still be a day trader and not place trades every single day. Part of your job is knowing when to not trade. I want to be very clear on something. What I tell you today is the foundation of what you'll need to know in a very simplified way. What I didn't teach you intentionally is the strategy. I didn't teach you any specific entry models, any specific confluences, or the exact condition on when to actually pull the trigger with trading. Even though I do teach all of that, that is not the point of this video. Market structure is the language. Strategy is how you speak it. If you found any value from this video, don't forget to like and subscribe. Drop any questions that you have in the comments below. Next video, we're going to be talking about your trading plan, how to build one, what goes in it, what doesn't go in it, and why having one is so important. Now remember, you're savage, not average, and I'll see you guys on the next one.